The preparation of the company financial statements, our question has got 55 marks. It requires us to spend on average 45 minutes. So our question is on Ministry Limited, whereby it reads you are provided with information for the financial year ended 29th February 2024. So very important for us to identify our financial year, where it's starting and where it's ending. So we are seeing that it started in the previous year, the following day, which is 1 March 2023 to 29 February 2024. So basically, this is our financial year consisting of 12 months. So on the required part, first part requires us to complete the statement of comprehensive income, that is the income statement for the year ended 29 February 2024. So we are given information that we are given here. So given information A, whereby we're given balances and totals of 29 February 2024, that is at the end of the year. So these are the balances that we are given. We see that we have got some missing figures in question mark, which obviously we need to calculate them as balancing figures, or with given information in additional information. So we have got a continuation of those balances, whereby we are having also the nominal account section, where we are given the expenses and income of the period. So moving on, we also have a continuation with adjustments and additional information from additional information number 1, going down to additional information uh, number 13, which is the last one, which you need to go through everything before you start to answer the question, so that you can easily locate in terms of relating adjustments to the items given under the nominal account section, that is expenses and also income or other items that might need adjustment. So going to answer section, you see that we have got the statement of comprehensive income, and we have got pre-entered figures that we have there from sales to other operating income. So it means we are going to start on other operating income that are not mentioned here, not bad debts recovered, not standard income. We can just try to identify other operating income that we have. So if we refer back to the question now, we try to go down to see what do we have in terms of other operating income. So going down to the nominal account section, down here, you'd see that we have got rent income that we have here. It's an income that we also need to adjust. So it is an amount of 258,300, but we need to check in the share information what adjustment we have in terms of rent. So if you go to information 6, it reads the rent was increased by 2,700 on the 1 July 2023. Rent is received 1 month in advance. So it means the rent for March 2024 is also received. Remember, our year is ending end of February 2024. But for March 2024 also is received, as it is stated here, that rent is received 1 month in advance. So what it means is the rent that we have here is for 13 months. We've got rent for 13 months. And then if you refer back to the adjustments, we see that the rent was increased by 2,700 on 1 July 2023. And the rent is received 1 month. So the rent that was received 1 month in advance is the rent that we need to subtract, because it doesn't belong to the current period. Remember, we should comply with the matching principle, that we should relate the income to this specific financial period. So we are saying the rent that we have for March 2024 should be subtracted, as it is a rent that is received in advance. So to find it, remember, we are only told that the rent was increased by 2,700 on 1 July 2023, and we are not told the monthly rate so that we can be able to remove the one for March 2024. So to find it, since we are given the total rent that was received of 258,300, so we have 258,300. So this is the total rent that we have that was received. But it was increased by 2,700 on 1 July 2023. So if you check from 1 July 2023 to uh, to the end of the period when the rent was increased, we check how many months are there. So we're going to count from July to March 2024 because the rent is stretching to March 2024. So we are saying the whole of July, uh, August, September, October, November, December, January, February, March. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9. So we have 9 months. So it means we have to remove the increase so that we remain with the same rent throughout the period that we have of 30 months. So we remove the increase, we say 9 months times 2,700 when the rent was increased, and we see what we get there. So if you calculate it like that, let's try to see. So if you say 2,700, you multiply by 9, you're going to get is 24,300. So if you get 24,300, 24,300 now is the total of the increase for the period for all the months when the rent was increased. So I will subtract it from the total rent received, and to see what do we get there. So we're saying 258,300 minus 24,300. Get 234,000. So you get 234,000. So after getting 234,000, it means this inside 234,000, we have got equal uh, equal rent throughout the year. So we cannot divide with the total months that we have. Remember, we've got 13 months. Remember, we've got an extra month, which is the March 2024, which is making the months to be 13 months. So we divide by 13. So we say 234,000, then we divide by 13. We will see what do we get there. So if you say 234,000 and divide by 13, we are going to get 18,000. So 80,000 is the rent before the increase. But the rent for March that we need to subtract, the rate was already increased. So now we're going to add the increase, which is 2,700 to get the rent after the increase. So if you calculate there, you see that you're going to get 20,700. So 20,700 is the rent for March 2024, which is the rent that we are supposed to subtract from 258,300. So we come here in another section. We are now saying rent income. So our rent income in brackets, we are saying 258,300. And then we subtract the 20,700, that is for rent for March 2024. Then if you subtract, the answer that you're supposed to get is 237,600. So basically, that's how we find it. And then we try to find for other incomes that we have in the question. So the next income that we have is commission income, whereby we are given it as a question mark, meaning we cannot find it in this list. So we can go to additional information to see if we have got any hint in terms of finding commission income. If you don't have any hint again, in additional information, obviously we need to find it as a balancing figure. So Going to the additional information, we try to see where do they mention about commission income. Remember, they've gone through everything before you start the question, so you can quickly pick where you have that adjustment. So it's adjustment number one, which reads a commission income for the year is being received in full at a rate of 4% of total sales revenue. So 4% of total sales revenue, of which our sales revenue were given this is 20 million and 35,000. So the 4% is the commission income. So you come here, commission income. Then in the brackets, we are saying 4%, which is 0.04 as a decimal. And then we multiply by the total sales which we are given here is 20 million and 35,000. So this is what we have done. If you multiply there, you'll see that the answer that you're supposed to get is 801,400. So that it becomes your commission income. If you calculate it correctly, it is 801,400. So this is what we have on this point. And then we check again if we have any other, we check again if we have any other income that we have in the question. So we refer back to the information that we have. I remember, if we have exhausted all the incomes that we are seeing in the list here, you have to check for other two items that can either fall under income section or they can fall under expenses. So you have to check for if there is trading stock surplus. Remember, trading stock surplus occurs when the book value is greater than the physical stock count figure. So when you have such a scenario, it means it's trading stock surplus. But if the opposite, we are having book value less than a physical, we are having when we are having a trading stock surplus, we are having a scenario whereby the physical stock count figure is more than the book value. So this is the opposite. And then the opposite is true when it's now a deficit. We are having the physical stock count now being less than the book value. So when it's a surplus, that's when it's falls under other income. And when it's a deficit, is supposed to fall under expenses. So we need to check for that before we leave the other income section. And then also we are supposed to check for a provision for bad debts, provision for bad debts adjustment. Provision for bad debts adjustments, remember when it's an increase, it will be an expense. When it's a decrease, it now falls under other income and it's an income. So basically, this is what we have in terms of provision for bad debts adjustment. So those two items are in terms of trading stock surplus and provision for bad debts adjustment. You have to check them before you leave the other income section so that you can see if they qualify under the other income section. So we start with the trading stock surplus. If we have a surplus, we see that the book value will be given in the list of balances, whereby we check for our stock. We have stock 982,400. So this is the book value. 982,400. So we come here, we see that 982,400 is the book value. and we check if there's any further adjustment that is going to adjust the book value in terms of adjustment that we are given. If we come here, you will see that we are given electronic on item 4. Electronic equipment was donated to a local children's home. Gross profit of 22,400 has been forfeited on this stock and it been sold. So it means although it's a fixed asset, but it's part of our trading stock, as indicated in the explanation. We are only given the gross profit of 22,400, which has been forfeited on this stock and it been sold. So this equipment was supposed to bring a gross profit of 22,400, but it was donated. So it means it already went out of stock. So we are supposed to subtract it from the book value that we have. And then the markup on this item was 35% on costs. The bookkeeper has not yet recorded this entry. So we need to calculate the cost of that electronic equipment so that we can be able to adjust it on the book value. So if you come here, let's just see what we have. So this 22,400 is the 35%, because this is the markup that we have, which is the gross profit. Gross profit is the markup. So we are saying 35% is equal to 22,400. It goes to 22,400. And then the figure that we are looking for is the cost price, which is 100%, obviously. Remember, if you say cost price plus markup, you get your selling price. So in this case, we are given our cost price is always 100%. Then the markup depends on the question. In this case, we are given it as 35%. And then if you add, you're going to see that the selling price will be 135%. So, but we are concerned with the 100% of the cost price. So we are saying 100% is the question mark, is the figure that we are looking for. So we just use proportion. What we don't have is 100% numerator. What we have, 35% denominator, then we give a figure, we multiply it, 22,400. So we calculate it in that way and see exactly what do we get. So we are going to get it as 64,000. So we have 64,000, which is the cost price of the donated electronic equipment. So since it was donated, it moved out of stock, we have to subtract it from the book value. So in this case, we are saying minus 64,000. And now this is how we calculate our we are going to calculate our trading stock surplus or deficit. We are going to say our book value. Let's just create some space. We are going to say the book value minus the physical stock count figure. So in this case, this is the book value that you are calculating in this case. So after getting your book value, then you subtract your physical stock count figure. Of which your physical stock count figure will be given in the additional information. It will take only the figure for trading stock. So the physical stock count on 29 February 2024, we viewed the following. We've got trading stock 923,200 here. So this is the figure that you are going to use as your physical stock count figure, 923,000. 200. So exactly like that. So if you calculate it, you're going to see that if you remove the brackets there, whereby you're saying 982,000, 400, minus 64,000. Get 918. Here you're going to get 918,400. So this 918,400 is going to be the book value, and then you subtract your fiscal stock count figure, which is 923,200. So in this case, we are having a scenario whereby our book value is less than the fiscal stock count figure. Our book value is less than the fiscal stock count figure, which is the scenario that we have on trading stock surplus. So it means this is going to be a surplus. So it means if you get a negative, it's going to be a surplus. So in this case, if you subtract, let's see what do we get by saying 918,000, 918,400 minus 923,200. And you are going to get it as 4,800. So this 4,800 is a negative. So it means using this method, if you get a negative figure, it is a surplus. If you get a positive figure, it's a deficit. So basically that's what we have. So we're going to take 4,800 as the trading stock surplus. So and then we just summarize the final calculation that we did here. So in that case, we go to our answer section and we put an additional income that we have, which is a trading stock. Trading stock surplus. Whereby in brackets, we are saying, in terms of the book value, you've got 982,000. 982,400, and then we subtract the 64,000 of donations, and then we subtract the fiscal stock count figure 923,200. So basically that's what we have, and then we got it as 4,800. So that's what we have on that case. And remember, we also have the issue of provision for debtors adjustment to check again if it's going to fall under the other income section. Remember, if it's a decrease, it has to fall under the other income section. So we again try to look where we have the adjustment for provision, which we are given at item 3, the increase in the provision for debtors by 6,500 rands was not recorded. So this is an increase. They've already indicated that it's an increase, so no need to make further calculations. The increase is 6,500. So whenever there's an increase, it is an expense. So we have to present it as such. So this is what we have, and then for that now we can leave it. It means we've exhausted all the income that we have in the question. You can as well try to go through the extra information that you're given to check if you have exhausted everything. So we go to the section of expenses, operating expenses according to information given. You'll see that we are going to start here. So we go to our list of balances to check what we have that we can include as expenses. So we can quickly pick the issue of donations that we have just adjusted. If you look here, this is a donation that we have made, and a donation is an expense. So that 64,000 that we calculated, we can quickly put it here as an expense. So we have donation, 64,000. So this is what we have. Then you can go to the list of balances now to try to see what other expenses do we have that we can also include. So this is a section that we can pick our expenses. We see that if you're going down, we have got the issue of director's fees. This is the first one that we are seeing. We are seeing director's fees here with an amount of 1,307,840. So we check additional information. What are they saying about director's fees? So let's go to our item 7. So we have item 7 that is indicating about a director's fees. So on director's fees, it reads the director's fees includes 385,520 rands, which is the half-yearly fees of Mr. Jabu, the sole director at the beginning of the financial year. An additional director appointed on 1 September 2023 received the same fee as Mr. Jabu. Directors' fees increased by 8% on 1 May 2023, and both directors have been paid their fees for March 2024. So we need to make an adjustment in terms of the director's fees, whereby we are given, I remember we are given the total of the director's fees here is 1,307,840. And then in terms of the additional information, we are being told that there is a 385,520, which is for half a year, and it relates to one director, which is Mr. Jabu. So from there, we can now be able to find the the monthly fee. And then additionally, there is another one which was appointed 1 September 2023, which received the same as Mr. Jabu. And then director's fees increased by 8% on 1 May 2023. And both directors have been paid their fees for March 2024. Remember, March 2024 is out of the recent financial period. So we need to remove the director's fees for March 2024. But we are seeing that according to the explanation, the March 2024 includes fees for 2 directors. We have both directors have been paid for their fees. So it means we have got 2 directors that we need to remove for March 2024. So from there, we can now be able to calculate. So we can make a calculation of the half yearly that we are given, and that's where we have the hint of finding the monthly fee or finding the monthly fee. So the 385,000, 385,520. It was from March. Remember, the year is ending end of February. So we have March 2023, March, April, May, June, July, August. So we should have 6 months half yearly. 1, 2, 3, 1, 2, 3, 4, 5, 6. So we have 6 months to August. So that's what relates to the 385,520. But then the fees increased by 8% on 1 May 2023. So we need to find the number of months before the increase and after the increase. So before the increase, we have got March, April. So we have 2 before the increase. Then after the increase, we are saying May, June, July, August. So that's where we have got 4 months after the increase. So for the 6 months, we see that it was 2. It was only 100% for the first period, 100%, of which if you say 100% divided by 100, you get 1. So it means 1 times 2 months that we had before the increase. So we've got 2 plus for 4 months, it was now 100%. plus 8%. It was the increase was 8%, which gives you 108%. So if you convert this to a decimal, you divide by 100, it becomes 1.08. So we are saying plus 4 months, it was 1.08. So we say 4 times 1.08. So in that case, we can now be able to find the total. So we can try to see what we get there. So in the brackets, you get 4.32, then you add 2. It becomes 6.32. So the total is 6.32. So we need to find the total for the 2 months. The total fees for the 2 months, for the first 2 months, which are equal. So we can make a proportion whereby we are saying the total for the 6 months, we are saying 6.32 is equal to the 385,520. Then the one that we are looking for is for the first 2 months before the increase. So this becomes the question mark. And from there, we can now be able to make a proportionate calculation whereby we are saying what we don't have is 2 over denominator over what we have, 6.32. Then we multiply by 385,520. Then we can be able to find for the 2 months. And if you multiply, we see what you're going to get there. You get 122,000 is what we see as a representation of our 2. We have got 122,000. So 122,000 is the rent is the fee for 2 months. So it means the monthly fee before the increase is now 122,000 divided by 2 to get the monthly before the increase. So if you divide by 2, get it as 61,000. So 61,000 is the monthly fee before the increase. But the rent that we want to remove, remember, is for March 2024, and it was after the increase, because the increase transpired on 1 May 2023. So March 2024 is after. That's why we want to calculate the fees for March 2024 so that we remove that one. Then since the monthly one before the increase was 61,000, then we multiply 61,000 times 1.08, that to get the one that is after the increase. Remember, it increased by 8%, which is 108%. To convert to a decimal, it becomes 1.08. So we multiply 61,000 times 1.08, and then we're going to get 65,880. So basically, this is what the monthly rent after the increase. So remember, according to explanation that we have in the question, they are saying both directors have been paid their fees for March 2024. So we have got 2 directors for March 2024. So it means we multiply by 2 and see the total for the 2 directors. Get 131,760. So this 131,760 is the one that we need to subtract from the figure for our total directors' fees. So if you refer back, you'd see that we are subtracting it from 1,307,840. So that's where we are subtracting that one. So we go to our answer section. We are now seeing directors' fees. So we are seeing in brackets figure that we have for total is 1,307,840. Then we subtract the calculated figure, which is 131,760. And then we do that, we are going to get our answer is 1,176,000. 176,080. So basically, that's what we have on that part. And then we try to look for another expense from our list of expenses. So after director's fees, we have got audit fees here, whereby our audit fees, we have got 69,720. We check again according to additional information what we having. So if you come to number 2, it's saying only 2/3 of the audit fees were paid. The balance would be paid in March 2024. So it means the one that we are given here is 2/3. The audit fee that we are given here is 2/3. So the one that we need is 1/3. So basically we are saying 2/3 is equals to 69,720. And the one that we are looking for is 1/3 that is missing. That we need to add to this one so that we get the total. So we can just make a proportion by saying what we don't have is 1/3, so it becomes the numerator divided by what we have is 2/3. And then we multiply by 69,720. So in this case, we can remove these fractions by saying 1/3 divided by 2/3. Obviously, it becomes 1/3 times we invert the figures, whereby the 3 becomes the numerator or the fraction that we have there. For this fraction, the 3 becomes the numerator, then the 2 becomes the denominator when we remove the division sign and put a multiplication sign. So it becomes 3/2. So obviously we say 3 to 3, you get 1. So we get as to 1 times 1, 1. Then here we've got also 1, 1 to get 2. So it becomes half. So basically that half now, we multiply it by the 69,720. So we are saying half times 69,720, and we get the 1/3, which is going to be, so basically it's 69,720 divided by 2. We get 34,860. 34,860. So it becomes at the 1/3. So the 1/3 is 34,860. So this is the one that you're supposed to add to 69,720 to get the total audit fees. So we go to our other section. We are saying now audit fees. Then for audit fees, what we have is 69,720, and then we add the 1/3, which is 34,860. So we calculate like that, you're going to get your answer is 104,580. So that's what we have on that part. So we check for another expense, of course, that we have in the question. So from our audit fees, we can go to our stationery, whereby our stationery, we are given it as 68,300. So remember, the stationery that we are given here in the list of balances will be the stationery that is purchased. So the one that we need is the expense in terms of stationery that was used. So to calculate stationery that was used, we say what was purchased minus what is remaining at the end of the period. Then we can find what was used, which is going to be the expense. So if you go to Excel formation to try to see if the stationery that is remaining at the end of the period, we see that on the part of our stock, we are only told that stationery used for the year. So stationery used is the one that we need as an expense. So we have already calculated figure for stationery used, which is 58,520. But when we go to the statement of financial position under current assets for stock, we are going to calculate the one that was remaining at the end of the period, of which we are going to say the one that we are given here, 68,300, then we subtract the one that was used, 58,520, to get the closing stock of stationery. So, but here our expense is already calculated, 58,520. So we come here, we say stationery. For stationery, we got 58,520. So we have 58,520. So moving on to try to see if we have got any other expense. Remember, we have already calculated the figure again for provision for bad debts adjustment, which is 6,500, which has already indicated that it's an increase, which is an expense. So you can quickly pick that and also put it as an expense. So you've got provision for bad debts adjustment. And the amount that we have is 6,500. So basically, that's what we have on that part. And then we can check also if we have got any other expense that we have. So if you go through the information given, obviously you need to go through the additional information to see if we have any other expense. Or you can try to check. Remember, stationery is the last item that we have. Dividends on order shares, we don't include it. So in that case, we can close and move to the next part. Remember, there is no option for us to calculate for our operating expenses since we've got a closed area for insurance, depreciation, and standard expenses. So in that case, we go down, you see that everything is pre-entered down there in terms from operating profit to net profit after tax. So it means we are done on that part. So we move on to the next part whereby it means us to prepare the statement of financial position for the ended 20th February 2024. So we're going to start on element of fixed assets. Element of our fixed assets. And obviously, if we go to the question, but if you check to our answer section, you'll see that for that, we only have one space for that element. So in other words, we have a property, plant and equipment or fixed deposit according to what is given in the question. So if you try to go down, we see that the one that is given is fixed deposit. So that is going to only non-current asset that we have, the fixed asset that we have, fixed deposit, MRJ Bank, which is a question mark. So we need to go to additional information to see anything that is going to lead us to that fixed deposit. So we can check. If we go to item 8, in the previous years, the business did not have any financial investments on 1 May 2023. They invested into a fixed deposit account at 9% interest per annum. The interest is not capitalized and was correctly recorded. So what it means is the interest on fixed deposit, we can take note uh, deposits is the interest income that we adjust in the statement of financial position. So if you come to a statement of financial position, you see that that interest income is pre-entered. It's here is 94,500. So 94,500 is the interest on fixed deposit. So if you come here, we have got 94,500 is our interest. And then the rate of calculating is 9%, 9% here, which is per annum. So it means that was what we have. We have 9%. And then, but this investment was there from 1 May 2023. So you need to count the number of months that we had that investment. So we are saying the whole of May, June, July, August, September, October, November, December, January, February, and the year ended. So we have got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So we've got 10 months for this fixed deposit. So obviously to find our 94,500 as interest, the calculation was like it was the percentage of the interest 9/100 multiplied by the fixed deposit, which we are not given, total amount of fixed deposit, which we are not given, and then multiply by 10/12, because the interest is per annum for 12 months, but the deposit was there only for 10 months. So it's going to be 10/12. So we multiply by 10/12. Then with this calculation, that's how we got to 94,500. So we can quickly calculate whereby, obviously, for 9%, it's going to be 0.09 as a decimal, multiplied by the fixed deposit, multiplied by 10/12, go to 94,500. So we make fixed deposit in terms of the formula whereby we are saying fixed deposit is equals to 94,500. Remember, we have got this 0.09. If you take the other side, it becomes a division, 0.09. And then our 10/12, if you take it to the other side, the denominator becomes the numerator becomes the denominator. So we multiply by 12/10. So we calculate it like that. So we can try to come up with the calculation. Whereby we are saying 94,500, and then we divide by 0.09. And then the answer that we get, you multiply by 12, and then you divide by 10. So with that, you see that the fixed deposit that you are going to get is supposed to be 1,260,000. So this is the fixed deposit that we have. So we come to our answer section. We are going to say fixed deposit. Fixed deposit. Then we summarize the calculation that we made here. We can come up with this summary, 94,500. 94,500 over 0.09 times 12/10. That's how we arrived at 1,260,000. So that's what we have. Then we go to the current assets section whereby we are given the total for current assets here as pre-entered. So for current assets, we are going to have our first entry here, which we can put inventory, which is going to be the total of those trading stocks. So if you come here, you see that for trading stock, we have got 9. We can just check in terms of what we have. So already we have our information about trading stock that we have there. So we are given that trading stock is 923,200, and also we was stationary. But stationary, the figure that we have is for stationary that was used. So to find the one that was remaining at the end of the period that is going to be our stock, we subtract the stock that we have here is 982,400. Sorry, the stock for stationary that we have is 68,300. So we say 68,300. Then we subtract our stock used, stationary used for the year, which is 58,520. And then what do we get there? And you get your figure is 9,780. So this is the figure that you are going to add to your trading stock to get the total for Invelo. So we come here, we add that in brackets, whereby we are going to say 923,200. And then we add 9,780. Get a total of 932,980. So that's what we have. Then we've got traded other receivables. That's the next current asset that we want to look at. So for trade and other receivables, we are going to start with the figure for debtors control. That is the figure that we are going to start with. So if you refer back, you are going to see that the debtors control figure that we have, we can just try to see. We have a figure for 480,390. 480,390. So that's the figure that we are going to start with. We've got 480,390. Then we look for further adjustments that are going to affect our trade and other receivables. So remember, we are supposed to look for accrued income, and also we look for prepaid expenses are also going to be part of that. Any transfers that we can see, can also be part of that. So we go to additional information and try to see if we got those adjustments. So we go down, check for that. Remember, we have got the issue of provision for bad debts. Remember, the current level of provision for bad debts is supposed to reduce the debtors control figure in the statement of financial position. So, but we are only told that it increased by. So where was it? The provision for bad debts was 24,000. It was 24,000. So we are saying this one plus 24,000. So we try to add and see what do we get. Get the recent level of provision for bad debts. So we're saying 6,500, and then we add our 24,000. We get to 30,500. So this one is going to be a subtraction as it reduces the trading other receivables figure. And from there, we check for another adjustment. Check for another adjustment that we have. We try to go down. So we've got directors' fees that was uh, paid in advance for March 2024. So we revert back to the statement of comprehensive income to see what was the amount for director's fees. 131,760 was paid in advance for director's fees. So this one we are also supposed to edit here is plus 131,760. Then from there, we also check for other adjustments as we go down. Okay, we also have a transfer on item 9. Transfer a creditors balance of 3,200 from the creditors ledger to a account in debtors ledger. So any transfer that is made from the creditors to the from creditors ledger to the debtors ledger of 3,200 is supposed to increase the debtors amount, which is obviously going to also increase the trade and other receivables balance. And also, if you go to current liabilities, because it's also going to increase the creditors control balance. It's also going to be a plus, the same 3,200. So in this case, we come with it here, we say plus 3,200. And then we look for other adjustments. Right. We also have the issue of, we check for the issue of tax. Tax can also have a receivable or a payable, depending if we are paid more than, if we paid more than in terms of provisional tax payments, if they are more than the tax amount for the period, we regard that as a receivable. But if the opposite, we are having, if we paid less than the provisional amount is less than the amount of tax for the period, it's now a payable. So in this case, we go to the list of balances and try to see the provisional. The provisional is here. Income tax, provisional tax payments, 1,812,730. And then we check in terms of the tax amount. The tax amount we're given it in the statement of comprehensive income, whereby the income tax amount is 1,750,000. 1,750,000. If I am correct, we can just recheck. 1,750,000. So we see that the tax amount is less than the provisional tax payment. So it means we paid more. So this is a prepayment and it is a receivable. So we need to find the difference by saying 1,812,730 minus 1,750,000. And we do that, see what do we get there. Then we get 62,730. 62,730. So that's the same figure that you are supposed to come with it here, and it's supposed to increase our trade and other receivables. So we're saying plus 62,730. When you add there, you get your answer is 647,580. So that's what we gave there. And then the last item that we need to put is cash and cash equivalents. So for cash and cash equivalents, we go to the list again and try to see what do we have in terms of cash and cash equivalents. So we check for the figure for uh, the bank if we have it for cash and cash equivalents. We check for the issue of the bank balance. We are given bank favorable. It's a question mark, which means we cannot find it. But if you go to our answer section, you'd see that we are already given the total for current assets. So to get the cash and cash equivalents, we are saying 3,429,700 minus 932,980 minus 647,580, and then we get the balancing figure is one million 849,140. Sorry, we can just put it just beneath that. One million 849,140. Then we are done on the current assets. We go to the lower part whereby we are going to equity and liability section. We've got the ordinary shareholders equity section. Obviously, we are going to have our ordinary share capital. And also, we can have our retained income. Remember, all these two are prepared notes for. So if you refer back to the list of balances, you are going to see that the ordinary share capital is a question mark. So it means we are going to find it as a balancing. The figure that we are given is for retained income, which is 1,038,480. So we come here, we say 1,038,480. And then we go down to our non-current liabilities. So for non-current liabilities, we are going to the information that we have in the list of balances. We are given the loan balance is 1,624,000. But if you go to the information, we might have an adjustment for current portion of loan, whereby we go to loan. All transactions with respect to the loan were recorded. Interest on loan is capitalized. A fixed monthly installment, including interest, was paid in full. The repayments, including interest for the year, amounted to 402,000. So that's where we have got a hint. We are given the repayments, including interest, is 402,000 there. With that now, remember to find uh, the current portion of loan. The current portion of loan, we are supposed to say repayments, including interest. Repayments, including interest minus interest, of which our interest here is going to be the interest capitalized, as indicated. As it is interest on loan is capitalized. So this is what we so already we have got 402,000, which is repayments including interest. Then we subtract the interest for the period, which we will get in the statement of comprehensive income, which are given is 162,000. So we subtract 162,000 to find the current portion of loan. So we subtract there 402,000, and maybe subtract 162,000. And then get you 240,000. So that 240,000, if you go to the note, it's saying the capital portion of the repayments will decrease by 5% over the next financial year. So obviously decreasing by 5%, it means it was 100%, and then it decreased by 5, which gives you 95%. So it means it's now 95%. So on our calculation, we are now saying 0.95 times 240,000. Or we can try to calculate it. So if you say 0.95 times 240,000, you are going to get your answer is let's just try to see what you get. 228,000. So you get 228,000. So this is now going to be the current portion of loan since it was said to decrease. So this current portion of loan is going to decrease the loan balance, which is 1,624,000. So we come to answer section. We say loan. So on loan we have 1,624,000 minus 228,000. And then you are going to get your loan balance as 1,396,000. And then the same amount is going to come here as a total for non-current liabilities. So this is what we have. And then we move on to the next part, which is going to be the trade and other payables under current liabilities. And of course, it starts with the creditors control. So we're going to look for the figure for our creditors control, whereby we are supposed to go to the list of balances. So coming to our list of balances, we see that our creditors control figure, we're given it here, is 124,565. So this is the figure that we have. 1,024,565 is the figure that we're going to start with. 1,024,565. Then we check for adjustments that are going to we are going to use under trade and other payables. Remember, we are supposed to look for accruals of expenses. Accrued expenses. We look also for pre-income received in advance. Income received in advance. In any transfers, remember we've got a quick pick that we can make of transfer of 3,200. And that transfer we are supposed to add here. Then we can also check for other adjustments, which we can start to look from the beginning. Right, we start with we can start with the figure for audit fees, which is number 2. So for audit fees, it is only 2/3 of the audit fees were paid. The balance will be paid in March 2024. So it means we have got 1/3 that was not paid for audit fees, which is an accrued expense, of which according to our calculations for audit fees, we got it as 34,860. So it's the one that we are also supposed to add here. So we're going to say plus 34,860. Then we check for the next one. Going down. We go down checking for another. We've got rent that was received in advance. Rent is received 1 month in advance, which is a payable. So we are also supposed to add that one, of which we calculated that rent and we got 20,700. So we are supposed to add it here. So we check also for if we have any other adjustment. So you go down, checking if you've got any other that we should include. So if you go to director's fees, there's no, we do not have, we have got this one, which is saying they've been paid their fees for March 2024, but we've already adjusted that under receivable. So this is a prepaid expense. We leave that one. We go to the transfer. We had already adjusted that one. So it means we've exhausted the tax. We had already adjusted under receivables. So we can now leave it as we have exhausted everything. So we can close the bracket and add what is in the brackets. So the final answer that you're supposed to get is 1,083,325. So that's what we have as a total other payables. Then we have the issue of the current portion of loan. Remember, it's supposed to be transferred and put under the current liabilities. We have to take note that the current portion of loan that you subtract here should be transferred and put here. This current portion of loan. And then we check for other payables that we can see in the question. Let's look for the issue of dividends. Total dividends for the year amounted to 745,000. That was total dividends. And the one that was paid, we can find it in the list of balances under the nominal account section, whereby you are given dividends on ordinary shares, 260,000. So this figure represents what was paid. Remember, every figure that is in these balances indicates what was paid or received. If it's an income, it indicates what was actually received. To expense, what was actually paid. So in terms of dividends on ordinary shares, 260,000 was the one that was actually paid, but what was supposed to be paid is 745. So the outstanding balance becomes 745 minus 260,000. Yes. Then we get the outstanding, which is going to be a current liability for shareholders for dividends. So we subtract, we are supposed to get your answer is 485,000. So we can just see what do we get there. We're going to get your 485,000. So we have 485,000. So in that case, we come here, we say shareholders for dividends. We have 485,000. So that becomes the last current liability that we have. And then from that, we can now be able to add to get the total for our current liabilities, whereby we add all what we have here to get the total that is supposed to come here is our total for current liabilities. So if you add, you're supposed to get 1,796,325. So basically, that's what we have in that part. Then we try to move up there and see. We've got a missing figure for ordinary share capital. But if we check here, we've got the current, we are not given the total equity and liability figure here. So we cannot be able to find this figure. So it means we have to search again in the question to see here we have a hint of the total equity that we have. So we are given that total capital employed after all adjustments were processed on 29th February 2024 was what 16,176,000. So you need to know what the formula for calculating capital employed. It is equal to total capital employed is equal to ordinary shareholders equity. Ordinary shareholders equity plus non-current liabilities. So that's the formula. So this is how we got our 16,176,000. So basically we are saying the 16,176,000 is equal to ordinary share equity that we don't have plus non-current liability of which we have calculated that one is 1,396,000. 1,396,000. So basically there, if you make ordinary shareholders equity, the sum in the formula, it becomes your 16,176,000 minus 1,396,000. And you are going to get your answer is 14,780,000. So this is the total for ordinary shareholders equity, 14,780,000. So if you come here, that's the figure that is supposed to come here. Is 14,780,000. So with that, you can now be able to find your ordinary share capital by saying 14,780,000 minus 1,038,480. And then you see that the figure that you're supposed to get there will be 13,741,520. So that marks the end of our question. Thank you for listening, and hopefully the video was helpful. Let's meet again in the next video.